Well, the stock market fell about 700 points yesterday. It was the worst day in a year that started off with big gains. Talking about that and other things is financial expert Terry Savage. Terry, how's it looking so far today?
Yeah, I'm just looking. It opened up about 20 or 30 points. Now it's down about 25 points. After we had such a brilliant start to the year and the old January effect, as January goes, so goes the rest of the year. We were up a lot. Yesterday was, the market had a 3-day weekend and decided to look around and see the numbers from last week. Consumers are spending. Credit card debt is at a record now, nearly $1 trillion.
Wow.
And maybe that means that this good news means that the Fed is going to have to raise interest rates. And that's what hit the market yesterday. And then we had this weird thing where Home Depot reported its earnings. And maybe everybody stopped going to Home Depot because they already remodeled during the pandemic. But one of the things Home Depot said was their cost of labor was significantly higher. And that means wages, higher wages are built into the cost structure, pushing prices up. And that gave another round of selling. The Fed's going to raise interest rates. And by the way, all of you savers out there, yesterday's T-bill auction was on Tuesday because of the Monday holiday. 6-month bills yielded just a bit over 5%. So finally, people who were suffering with low interest rates, the savers, are getting returns of 5%.
But wasn't that all predictable?
Why was it a shock? Why did it all happen at once?
Yeah.
Larry, the market's kind of like that. Everybody gets into a groupthink mode. The groupthink was at the beginning of the year, we can see the light at the end of the tunnel. The Fed's got it beat. They're going to stop raising rates. And then, like a herd swerving, like birds, a flock in the air, everybody decided, wait a minute, the Fed's going to have to raise rates a lot more. One of the Fed governors said that too. So, yeah, higher rates are bad for the stock market. Look, if you can get 5% for 6 months, 4.75% on a 2-year Treasury bill, people are saying, why do I need the risk of the stock market? So
there you go. All right, let's get to some viewer questions. You've talked about buying those Treasury bills, as you mentioned. Are they safe? Where do you buy them? Remind people how to do that.
Okay. Treasury bills are IOUs direct from the government. 3- and 6-month Treasury bills are sold every Monday at auction. They are, yes, the safest thing in the world, and don't listen to all those people who are talking about debt ceiling defaults. And you buy them at treasurydirect.gov. If you go to terrysavage.com, look on the right on links, it says how to buy Treasury bills. It's so easy. It's a $100 minimum. You can buy them this week and next week. It's just really, really easy to do. So, by the way, if you had Treasury bills last year and they matured, you're going to owe income taxes. Not if you bought them last year and they haven't matured yet, but if you bought 6-month bills and they matured last year, so go into your Treasury Direct account and there'll be a message saying, here's your $10.99 for the interest.
All right, next question. I bought Series I bonds in October, but I don't see any interest in my account. What happened?
A lot of people have been posting on my blog asking about that. Remember, there's a 3-month penalty. You're going to hold those I bonds for at least 5 years to avoid a 3-month interest penalty. So they don't even give you interest for the first 3 months. Then it takes another month for them to calculate that interest. So along about the 5th month, you'll see the interest drop into your treasurydirect.gov account where you bought them. Don't worry, the government knows how to calculate your interest. You'll get it. All right. You don't pay taxes on that, though, by the way, till you cash them in way down the road.
Oh.
All right, this person says, if I only get income from Social Security, about $16,000, do I have to file a tax return?
No, this is very interesting. We're talking about seniors now. If your only income is from Social Security, then it's not taxable and you don't have to file a tax return. But if you have other income, maybe dividends, interest, a small pension, then if you're over 65 and you have non-Social Security income that exceeds $14,250 on a single return, above that, with other income, you do have to file. Your Social Security won't be taxable at that level. On a joint return, it's a little over $27,800. So tax time is here. Maybe you don't have to file.
All right, next question. My husband wants to do an inexpensive estate plan with an online website. Is this a smart idea?
This is not a smart idea, and I've been hearing a lot of commercials for this. Yeah. By the time they figure out you made a mistake, you're not going to be around to fix it. I highly recommend, maybe a simple will's enough, maybe a revocable living trust. And again, at terrysavage.com, there's a whole short video I put up there about the difference in what you need to know. Now, you need an attorney to do this. It's just pay for it. It's worth it. It'll save a lot of hassles for your heirs. And there's a website called search-attorneys.com. That's a website of the American Academy of estate planning attorneys. So you can search geographically. It shouldn't be that expensive.
All right, you can ask Terry a question at terrysavage.com. Thanks again.
Thanks, Terry. Time now for Around Town.
Hey, Anna.